Yo, I'm back. I decided I'm going to restructure my content on YouTube. So today I'm coming with, obviously, so we learned POIs over the weekend if you're in the Telegram. So I thought, why not show examples throughout the week as I'm trading? So I'm going to show you what a refined POI is, what POIs actually are, how to refine them, right? So you get the best possible entries that you know that this is a proper inducement or it's not. And I'm going to show you some other, I'll call it hidden POIs, but yeah, I'll show you what they are. But yeah, let's get into it. So today, obviously, we're on German 40. Let me just make sure that the watermark ticker. Let me replay mode. Yeah, but that's a bit too deep. I don't like that. I don't like that. It's too dark. Perfect. We can all see German 40, right? Alright, cool. So let's get into it. I'm gonna start on an hourly. In fact, let's start on a daily so we get everything correct. So on a daily, what can we see? We can see that from this high here, right, we came and made this low, breaking this portion here. However, we did not break this portion here. The reason why I say this portion here is because this portion is what led to breaking this portion here. Then that led to breaking here. Then we carried on going. Then we came and mitigated, went and done another high. So we came back down and took out this portion here. Yes, we have a new cycle, which is true because this was a buy cycle. Now it's a sell cycle from this portion here to this portion here. However, this portion here is what broke this portion here, and we haven't broken that yet. When we break that, that's when we know that, okay, cool, that was the decisional to break in here, right? And here is a point that created this low here. Then obviously carried on. So this sell cycle went like this, and then we didn't mitigate basically. So we went up. So this portion here was the decisional that broke this one here, right? This portion here did not mitigate here, so we don't classify this one because you can see that, okay, cool, this is where it actually went down from. Yes, that's the decisional, and the decisional got broken. But this portion here, right, this is a failed decisional because if you look at it, look, from here we took out this low, went up, didn't break this cycle, but did we break it? Let me see. I don't think we broke it. Sometimes we just make equal highs. So that's 479, that's 477, so that's lower than this. So we didn't break this portion here. So we went from here, basically breaking this, mitigation, right? And then didn't finish the expansion, came up again, mitigated again, and then we went and broke it. So this broke it. And you see when we broke it here, this did not come and mitigate this candle here, the black candle. So obviously there's a gap there, there's an inefficiency there, right? So obviously price went down. This doesn't become a decisional, it becomes, basically call it an internal range, which is we broke structure, and that point there just carried on going. So it's an internal range supply, this portion here. So when we came there, obviously likely to fail because why is an internal range supply? And when we break structure, we ideally target these. So anyway, this is a decisional, right? But it's a decisional that broke this. So I want you to remember that. But this, you might not see it on the charts just looking at it, but you have to look at what actually created this low, this madness that happened here in price that went all the way down to here, right? You have to know it. Let me get water quickly. So cool. Now we know that now. That's a demand, right? So cool. We haven't broken it yet, so we're likely to go and break this high. Is very likely, right? If that's likely, let's read this low, how this low was broken. This low was broken through this leg here. So obviously if you look at it, that leg, obviously this took the high. This is where the extreme would be, and then obviously the extreme did not break this low, right? We came, mitigated this new buy cycle that we had here because we had liquidity sweep, main push, breaking the high. So obviously when we came down here, there's buyers here, so we was mitigating, and then we went up here, and then this broke this demand zone, right? So when it broke that, is ideally decisional and extreme. So when we touch here, we're likely to come back down to visit this IFC because this will be an internal range. Why is it an internal range? Let's read it again. This high went and broke this low, right? And then from there we went and broke this high with this candle here. So this candle here, when we broke it, and an internal range took us up, and we're literally bouncing off internal ranges. So when we reach here, we're likely to come take out this internal range as liquidity because a lot of people think this is a point where we shouldn't break. Tapping into this portion here, so maybe we wick it by a bit, tapping into this portion here, possibly, and then going back up, or we just break it. Is a scenario, right? But that's what we're building up right now. So we are bearish, right? And we're having a complex pullback going up. So if we haven't reached this portion yet, I can trade the internal range to reach there. So let's go on a daily. So on the daily now, we can see that, okay, cool. Now, not on the daily, on 4 hour, wait, yeah, on a 4 hour, cool. But on a daily, let me just read something quickly. This is the point that led to this low being broken. You have to do that one as well. Because this one here, what broke it was this candle, right? So that became the decisional. This candle didn't mitigate the previous point that took a high. It hasn't mitigated yet, right? So this portion here is actually where the causational point is. This is the decisional. That's why when we reached this portion here, we had this move back, taking out an internal range. Look, then we went up. So this portion here obviously was a decisional, but this portion here, because this was a decisional, right? This portion here, there's going to be a lot of liquidity there as well, because this becomes like an what do you call it? An extreme of that range, because every candle is a range. So this will be the range, the decisional range that broke this low, right? Why that low specifically? Because this took liquidity and broke this high. So when we came down and broke that, we have a new cycle in place. So this new cycle has a bearish move, right? And the bearish move obviously started from this decisional supplier, and then we have the extreme being this portion here, but ideally from here onwards to here, right? And that being a supplier, yeah. So if that's the case and we've broken a decisional, we're likely to go to this portion here. But when we reach here, this portion here is what, when we broke this, right, this went and done that. Here, when we took out this liquidity, this range low here, we're meant to fly up, but we failed. So it's this portion here that obviously caused price to come down. Ideally, you can say it's like a second, but it's gonna fail anyway. But we know that it's thing. But when we take that high, we know that that's the point where sellers were at. So when we took that high, I want to basically let you know that, because when I go on the lower time frame, when we took that out, we basically have a lower time frame breaker structure, because that was a supply and it's been broken. What led to that? It was this portion here. We went from, in fact, if we read it properly, it was this internal range that went and took us up here. So from here, we're likely to come down and obviously take out this internal range, possibly. But at the same time, because there's so much buy momentum, we can just literally do it internally, right? So if this is on a 4 hour and this is our current main push, so this will be the extreme, right? And there's no decisional. So it's an extreme that went to break this internal high and then this external high, let's just say, right? It's all a change of state of delivery though, but obviously internally is a BOS. So let's go on an hourly now. So we couldn't find one on a what's it called, on a 4 hour, because it was too big. So we come on a daily, and the daily again is basically like the 4 hour. So it was at this main push, right? Cool. That main push, obviously done it there, and then we know that we had this point come down and break this portion here. It broke it, mitigated expansion. Then we came again, mitigated, didn't make the expansion. So we're building liquidity, made the expansion, but that expansion there, obviously there's nothing here. So we have to go and look at the internal ranges, because when we broke this one here, this portion here went up, right? And then we started coming down, then we went up again. So this portion here is an internal range as well. So obviously there's nothing on the hourly that we can see. So let's go on a 15 minute. 15 minute, now we can see something. We can see that, okay, cool. That portion they were talking about, this portion came, took liquidity. So this is us finding the POI, by the way. So it took liquidity, right? So they done an inducement. How do we know it was an inducement? Because it took liquidity and done the new market structure shift. So a new liquidity cycle, new market structure cycle. Cool. Now let's read it. It was this portion. It will go lower to qualify, but it will be this portion here on the M15. But cool. Why that point there? Because look, there's a gap between this portion here, right, and this portion here, and this is what led to this break. So if there's a gap there, that means that the buyer momentum started from here. So if this portion here is just an internal range, so we're likely to come back down and mitigate, and we mitigated here. But that's all on our other side. But we didn't fully mitigate properly. That's why we're going to go on the lower time frame and I'll show you. So when we mitigated, you can see that we're building liquidity. We keep mitigating it, and we break it, right? We break this portion here that was a mitigation, but we broke and tapped into the open of that candle. But remember, we're going to go on a lower time frame to qualify it properly. But anyway, cool. I just wanted to show you that it qualifies as a decisional, right? Because we know that there's a liquidity cycle here and a new market structure cycle here on the M15. So obviously let's go on the M5, because the M15 is not showing much as well. It's showing like a bigger picture of it, but it's not showing us what's happening right now. So go on the M5. Let's read that same zone again. Look, we had the liquidity taken, went up, change of state of delivery, because this was the candle that led to this liquidity being taken, right? Change of state of delivery, we came down, mitigated this portion here, then we went up again, didn't break nothing, we came down again. The reason why we didn't break it, because sellers met and buyers met sellers, right? And sellers obviously are strong because they have the cycle backing them, and this has happened, so there's more sellers. So obviously when we get here, there's a bit more selling pressure, but when we come down a bit, the selling pressure kind of stops a bit, and then we have momentum or volume or thing that buyers can buy, and then they go up here. When that happens, we call this a decisional. So you see how this portion here is where buyers had control. This is where they took control from the sellers. So that is where we're refining it to on an M5. Same M15 thing, but this is the M5 version, right? Cool. And then you can see that it led to a break. Like, after here, we had candle number 1, candle number 2, candle number 3, candle number 4. Candle number 4 broke it. After candle number 4, right, you see how we had this little move down, and we took out candle number 4's low. I just want to show you something. Took out candle number 4's low and then went up. That became an internal range demand, right? So we went up, came down, mitigated, fell to go higher. We took out that internal range demand, still fell to go, came out. This cycle here is done, by the way. Look, main push, mitigation, expansion. Cycle is done. So when that cycle is done and we've taken this liquidity and there's still buy momentum here, let's read this portion here. This portion here, remember, this is where we came and broke these candles lows, right? After tapping into the extreme. Then we went up, right? And we broke it. But when we broke it, what broke it? It was this candle here. This candle here broke it. What was the previous candle before that? And is there imbalance there right now? Yes, there is. Look, boom. So we use a candle that broke it with the imbalance. Ideally, you're meant to cover the whole candle like this. This is the previous candle before that, and there's imbalance between that and that. So candle number 1, candle number 2, candle number 3, breaking this portion here. BOS. That's how you got to view it as, right? So that becomes obviously a point of interest. That's why we tap it and then we go higher. So just remember that. But if I look at it properly, this portion here is not, this is basically like the decisional of this internal range. So the decisional has been mitigated, but the extreme has not been mitigated. And if it hasn't been mitigated, and obviously it's led to a higher thing, we're likely to come and mitigate again when we come and test those buyers that done this move. So this becomes a qualified POI, right? Liquidity cycle, market structure cycle, and we haven't mitigated yet. So obviously we build all this liquidity. So we have this liquidity here, and then we have Asia low liquidity, and then we have smart money trap liquidity, right? So obviously they're seeing that Asia low got taken, we went broke, had a change of style delivery, mitigation, right? They're trying to get in before London open. This will be here, trying to get in like Frankfurt times, basically trying to get in before London. And then what does it do? It doesn't break the high. Then we come down, basically mitigating the cycle, which is main push, mitigation, expansion. Cycle is done and where? M15 decisional, qualified one. Okay, cool. If it's done, it doesn't mean we take the trade straight away, but look, we also have liquidity there, right? So it's a mitigation tap. When we do that, what I done was, well, I woke up a bit late, but I woke up, price was already here, right? So it's done. Mitigation, breaker structure. So we internal breaker structure. So this point here being broken. Why that point there? Because that's where the mitigation happened. Do you get where I'm coming from? So that's where the mitigation happened. We tapped it. Right, we tapped it, done a main push, right, breaking this portion here, because this portion here did not break this point here. So we broke it, and then obviously we broke this point, took out Asia higher, right? And then obviously, what is this as a SMT supplier? Why is it SMT supplier? Because what is the range we're in? The range we're in, we're bullish. So all of this is just internal price action bringing us to the demand zone, the causational point that we refined, right? Because we have this portion here being an M15 decisional, and just below it obviously is the M5 extreme of that range, this range here from this main push, because we didn't mitigate everything and went up. So I'm seeing it as this point here, any supply zone here, right? Once we reach 1 or 2 zone, this zone, and we have the reaction when we meet them, we've basically mitigated, right? So if we've mitigated, the internal ranges don't matter no more. That's why they become SMTs. It's not because, oh, it didn't take liquidity here or there's liquidity above it. That's a plus. But the thing is, we've mitigated. We had the efficiency of the pullback, which is we've done causational move. We need to come back, test it, and then go higher. That's the aim that we're looking for. That's how you trade a mitigation trade. That's how I trade typically. So cool. We tapped the M15 decisional with liquidity taken, plus a new main push, but is invalid because obviously it's hit the SMT. But with obviously knowing that it's an SMT, we can bet that this is going to get broken, so we can buy here and sell here, right? But if we pair up again, if the decisional gets broken, if the decisional thing gets broken, we're likely to go to the extreme. But then if we look at the extreme, we can say that point that we took was obviously 4 hour point, which is was a supply zone, right? So we've taken it higher, and then we've come and cleared liquidity, right? clear liquidity. So at least we need to test it again. That's the aim. So if that's the aim, I can bet that, okay, cool, buy in here, right? Just after my key window was done, let me just show you. So right here, right? This portion here done the inducement and it went and done this. So we had main push, mitigation. As we're mitigating, what do? Take out liquidity again, tapping into this portion here. This is an M5 one, but we're currently on M1. So this is the M5 zone. So you classify the whole zone because, yeah, man, you don't want a POI. Sometimes you can come lower, but at this point here, we had this low that came and done that. Done this, mitigate already and went up. So anywhere in this zone is a thing. So you just have to wait for the confirmation. So the confirmation was obviously leg number 1, leg number 2, breaking this point, which is the one that led to this low being taken. Cool. When we done that, I simply just executed. If I show you here, yeah, I simply just executed and then, yeah, went up. But then when I executed around here, so obviously, yeah, 15-minute buffer. So when it done that, I just literally just market executed. I should have waited a bit. Obviously, there's an IFC here. Again, point of interest that I'm telling you about and refining it. So this is the M1. So ideally, I should have taken it from here, but when I saw this, I said, yeah, let me just enter it and put my stop loss here and I'll trail it. So I entered there, price came, mitigated, hit this portion here. Why? Because it's a supply that's broken this portion here. It comes back down again, but that supply does not fulfill its move. So buyers took control and then went up. This all became a main push from here to wherever we reached. I think it was there, yeah, this portion here, or even here is a main push. You can come from. But then now, if it's a main push, what broke this high? Because that's what this portion was, just a change of the delivery, right? I put that there, but this is the actual BOS, right? Breaking the supply as well. So obviously it all started from this portion here, but we also know that there's a decisional of that range from here. If this is a decisional, then that decisional basically means there's a buy cycle, right? A smaller buy cycle took place. So if that's a smaller buy cycle, we have a main push from this point to obviously this point here, right? But that point there, before we had a main push from here, breaking here and here, right? And when we broke here, we had this new main push that went and done this, if we're reading it internally, right? So we had a main push and we just carried on making that main push. Just think of it like that. But internally is that many main pushes happening. So this portion here also came down and went up. So if it done that and it did not break this, if I show you, meaning that is the cycle that broke it. So that becomes a decisional as well. You see how it did not break it? It was equal highs. It did not break it, this portion here. So if we done this inducement, taking out these candles lows and then went up and we didn't break this main one, the one that broke it, because basically meaning sellers were here. When we got here, sellers didn't let buyers break it and then it came down again and buyers broke it. So this portion here becomes a decisional of this decisional. Don't get confused, it's just the same thing, right? It's the same thing, but it's just that you need to know what, like how you're reading it, like currently. You can come from currently, which is, this is the main push on the M5. We're likely to come back down here, right? So if we're likely to come back down there again, then you can come from. But to me, my break even is there, and I'll explain why. But so cool. Anyway, let me go back on the M1. So if that's the case, this becomes obviously a decisional. But I call this the break and test inducement demand. Why? Because it didn't have an inducement inside of it. So we have to, if we're literally going to use it, we have to create liquidity to use it as a demand zone. So what do? Liquidity here, we don't break structure. Liquidity here, inducement basically, because it led to a new market structure cycle. So new liquidity cycle, new market structure cycle, but it still hasn't tapped this portion yet. So it's max liquidity, right? It's max liquidity. So when we come down here and take it, that is the inducement, because we're inducing a new liquidity cycle and a new market structure cycle. Everybody is involved around here and around here, right? So when we reach there, we're taking out their stops, tapping into that actual point, and then we're going. And that's where we are right now in my trade. So obviously we done that inducement, went up, right? But we didn't break structure, which we don't need to yet, because we know that this portion is a magnet. And then what we got right now, we know that we've got liquidity building up, right? Liquidity building up here. Liquidity building up here, equal highs. Let me just put this as. So to me, I'm in a trade right now, but even this, it could still fail. And I'll tell you why it could still fail, hence why I put my break even in. So obviously we have liquidity here. We haven't reached this portion yet. This portion here was just simply a new sell cycle, right? We're accumulating, so we're bringing in more sell cycle, like more people to sell basically. So we went from this high, breaking this low, right? They're seeing as there's nothing here. If I was to go on the M5, you see that there's nothing really there, right? If there's nothing really there, people are thinking, yeah, we're going to come down to these points here, which is true, possible. That's is all, to me, this point here is a gamble, isn't it? Because we're meant to go and reach it. But if we're doing all of this here, we can see it that, okay, cool. If we went from this portion here to come down to here, right? And then we went up, didn't break it after tapping this portion here. We didn't break it, but then when we tap this is the extreme of the sell cycle. So if we done that and we came and we didn't break this, and we hit the extreme of this point here where I said is a qualified mitigation, right? This portion here is an extreme that we went from here breaking the decision order, but we didn't break the official high. But that point there, when we reached there, is the extreme sell cycle, right? Extreme of that sell cycle. If I was to draw it out, it'll go like this, so you can see it. Is a main push from here to here, right? Let me make it green, no, orange. And then this as green, right? Okay, cool. And then we've come and done the mitigation, right? Mitigation. And then obviously we've had liquidity also taken, right? So cool. If we've done all of this, right, we had a new market structure cycle, right? Disregard this point here. Let's just say that the reading price action, we have a new market structure cycle and a new liquidity cycle, right? Taking this, because this took liquidity here, broke structure, came up, took liquidity here, came down, right? But when it came down, it did not break structure. And when we got here, what did we have? We had build up, inducement, meaning, let me put this as inducement, meaning the buyers that tapped into this point of interest that I was talking about, which I call it the break and test inducement demand. The reason why I call it that, because it typically has no inducement formed within it, so we have to create an inducement when we tap it. So you can come from for it to react the way it needs to react if there's really buyers there, and you can see that there's really buyers there. Why? Because when we were coming down to tap it, what was we doing? Inducing buyers. Look, this portion here, sweep, new market structure cycle, right? Breaks. Buyers' money are lost. Okay, cool. We do the same thing again. Induce, break a structure here, demand broken. We don't reach the extreme of the extremes. You can see the trend line here as well. So they're seeing it as it's going to fail, right? Then what do? Come take them out. Buyers lost their money again. Then we do here again. Induce, right? Went and broke the high officially because there was a trend line there, right? Cool. We've broken officially. Now the buyers who lost money here. Now they're thinking, fuck it, let me buy it now. So I'm gonna put my limit here and probably put my stop loss here. So I have a bigger stop loss now. And what does the market do? Comes and takes them all out, right? Last buyers, so three cycles of buyers have been taken out of the market. And when they've been taken out of the market, they're gonna start saying, you know what, we're selling, right? So this is our new main push. When they recognize that this is their new main push, they're not factoring that we have tapped into this portion here, which is the break and test inducement demand, which means that we're going to come down to it. Sometimes it's just a tap that here, go up and then form trend line and then tap into it and do that. This one, it didn't do that. This one is just, there's this demand here, right? We haven't tapped into it. So we need to create liquidity to tap into it because it had no liquidity cycle inside of it. So we're creating a new liquidity cycle, tapping into it, and for it to give us a new market structure cycle, which is to break this portion here. Right, which is where sellers, these buyers, the early buyers, when they switch their buyers to go sell, this is where they're going to get taken out. And this is what used to happen to me in the markets. I'll be buying here, getting taken out. Then officially have this one. I'm like, you know what, I want to buy again. I get taken out. When I get taken out here, I flip sells, right? So I sell, maybe I sold here. It will show me a bit of profit. Then it will come back. I'm thinking, damn, probably take me out and break even or something. And I'm viewing it as, oh, we had a new main push. So from this point to this point here, let me sell here. So I sell here, I have the liquidity, I have the candle being broken, everything, but I don't get a mitigation. Price just keeps running. So I'm then thinking, all right, cool. When it comes here, I'm going to sell again, which is possible. We could, because we have liquidity as well. But we have to read it as we've taken this liquidity first, right? Back in our main thing, right? The only thing that can happen is this liquidity cycle could kick in for us to come and get a break even. But if we do that, then we're likely to go down. But let me show you why I said that this trade might be a bit risky. So you see on the daily, we took out this portion here. This portion obviously we know is going to get broken. But when we break that portion there, because from here to here was a one leg break, all these points here, this failed. So this is likely to give like a reaction for us to come back down to either mitigate this portion here. It could do that, right? It could do that. But the thing is, if we pre the hourly, we could also say the same thing. Look, we went from, this was the internal break that led to the official break, but the internal break, when we broke it, you can say we've mitigated already, so we're not going to come down here. But this portion here, where that led to this break here, because this was a high, we could use this, not break this possible SMT, and then come back down, mitigate, and then probably do that. Or or we can just go straight there, take it out, tapping into this daily decisional supplier that we marked out, and then do that. So I'm more advocating for the second option, but this first option could still happen, right? It could still happen. But obviously, reading the daily with the daily profile, let's read the daily profile. We had Asia here, we had London doing a manipulation. What's New York likely to do? Continuation. So it all fits the narrative in terms of what could happen, and are we on the right side? So obviously we're in here, currently up 2,100 and something, right? 3R will be here. I'm gonna take partials, and I'm gonna let the rest run to here, possibly. To go come from, because we know that this is possible, is a possible SMT, but at the same time it could hold, and scenario A could play out, which I was talking about, because this will be the extreme of that sell cycle. This sell cycle, taking liquidity here, coming all the way down, breaking this portion here, right? Internally though, do you come from? It's still inside a buy cycle that broke that. It didn't break this low. If it broke that low, different story, but it didn't. So it's a weak one, and it's likely going to get broken. But at the same time, it's the one that done that. So we could hit here, come down, tap into this portion, and then go higher. It's a possibility. So to me, I won't lie to you, 1 to 3, I'm out of it, and then yeah. Ideally, I said 1 to 4, that's when I'm out. But there's a possibility that this could break. So yeah. So yeah, man, this is how you find your point of interest, qualify them. Remember the hidden one, the BTS. I don't know why I call it break and test, but it's because it normally happens with break and test. It normally happens with break and test, but yeah. Oh yeah, scenario A as well, we could have it from here. So where we are right now, so obviously we know that this failed to break this, right? So at this portion here, we could ideally tap it, and then using this liquidity, come down and take out all of this, and then possibly come into here. But even then, this, we could just induce the whole POI and then do the Mazzoline. Do you get where I'm from? So that's what I'm kind of looking for. Hence why I'm still in BE. I would have taken it out, I wanted to, but it's because there's that possibility that we could still get that 3R, right? And that possibility obviously cost me, because I might get BE, because this is the M5 decisional. But at the same time, I know that this demand zone right here, we need to generate liquidity to obviously fuel price higher. So obviously we tapped it, we generate liquidity, tapped it, and would we have new main push? So from here, breaking a decisional is a new main push. It classifies as a new main push because internally we have a new market structure cycle. But obviously pre-it here is just a liquidity taken and a new market structure cycle, not a confirmed new market structure cycle. But where is tapping and going up from is valid. So obviously we classify as a new market structure cycle and a new liquidity cycle, but it hasn't fulfilled fully yet. There's not a complete new market structure cycle, it's just an internal one. We can't mitigate it, and then we have a new liquidity cycle, right? A new market structure cycle. So we have liquidity in place right now. And then again, we come and tap that. We have a new liquidity cycle, a new market structure cycle. Do you get where I come from? Doing the new liquidity market structure cycle, breaking the high. So from here, I'm hoping that this portion holds, because it will be the extreme of that. If it holds, if not that, then the decisional. Because this went, it didn't break it. It was this that went and broke it. So in fact, it was this one here. But we will classify this candle here. Why? Because that's the candle that went, and then this one went, and there's an imbalance between these lot here. So this one here is basically like the decisional is supply turn demand, right? Because it broke this portion here. In fact, factor in this candle here, because it'll be break and then break. So these two here, but it could fail, and then this is the extreme. Right, and if from here, if this liquidity cycle does not break this one here, right, and let's say it forms something here and then we induce again and go higher, then you know that, because right now we know that inducement number 1, right, inducement number 2, inducement number 3, so we're likely to have inducement number 4, which you can come from. But at the same time, if we read here, we have inducement number 1, inducement number 2. So obviously they're coming to a point where we have 1, 2, and 3 on our side, but they're all internal to the 1 and 2. Do you get where I'm coming from? In fact, it's all internal of the 2, and this 2 failed to break structure. but this one here failed to break structure. So obviously it's a bit dodgy, but then when you read it from here as well, we know that, okay, cool, we're coming off here, inducement number 1, inducement number 2, inducement number 3, inducement number 4, then we break structure, then we come down again, right? Inducement number 1 fails, inducement number 2 fails as well. So from here, obviously I said we could likely break it, but we know that if we break it, this inducement here, we're hoping if it holds, because none of this hit a point of interest. This actually mitigated that portion there that I was talking about. So this one here, we're hoping for it to hold. If it doesn't, we're likely to come take that out and then come into this portion here. And if that's the case, that will be a break even, because if that happens, this could simply just start, because this will be a new cycle, because it will be from here to here. And we have this one completing a new cycle, this one also completing a new cycle. So then, yeah, we're likely to then break this and probably go to the extreme, because we're following that plan of this high has been taken and we need to come and take out an internal low, which will be this point here, right? So I'll be out of it. I would not be trying to hold it thinking, oh, it's a decision or has it been mitigated, so we're likely to go. No, because if we look here, we have liquidity also here as well, right? And this could be us taking this liquidity to compare up this liquidity. That's what I'm looking at. That's when we reach this portion here, this being the liquidity, taking the liquidity upstairs to then come down and take out the liquidity downstairs to then fuel us all the way down here, possibly, right? Possibly from time we're accumulating here, it means that this portion here might be a strong point. So you gotta think of it like that. But yeah, man, that's pretty much it with point of interest though. So yeah, I'll update you lot about this trade in a Telegram if it plays out or not. And what else is there? Oh yeah, if you haven't joined the Telegram already, join the Telegram, because I do things like this weekly, but I'm going to start incorporating the daily ones, like when I take a trade, and show you what sort of concepts I use here and how I applied it to the day. So yeah, man, I'll catch you on the next one.